So, Brooke, I'm looking at these numbers. This is the second time in a row in the last 3 months that they've revised their forecast going forward. And when I look at consumer spending, I look at business spending, I look at all the trends in online shopping, and I'm a little confused as to why they're not making money.
Right. I mean, it's interesting because FedEx does sort of paint this global slowdown picture. And if you remember, their last earnings report sort of set off alarm bells across the economy as to whether we may be starting to see a slowdown in the U.S. And I think with FedEx, what you really have is some idiosyncratic issues. And so they acquired TNT Express in 2016 for about $4.4 billion. That significantly expanded their market presence in Europe. The idea was that they would be better positioned to benefit from cross-border e-commerce. They could save costs. What happened is, of course, that Europe really has not grown. They've run into all kinds of headwinds as far as integrating this deal. And so I think, FedEx is not seeing the growth, but that's partly because they made some bad decisions.
So FedEx does have a really great view on the global economy. They are kind of a bellwether. But what you're saying is that, say, unlike UPS, which is not down as much, FedEx really leaned into the weak parts of the world economy.
Right. Well, so the irony is that UPS actually tried to do this TNT deal. And if you remember, European regulators blocked that, and FedEx came in a few years later. So it seems like they very much dodged a bullet here. But I will say, I mean, there's just a lot of legacy issues with TNT. They were going through a restructuring at the time that FedEx bought it. They've had to continue with that work. They're now saying they expect $1.5 billion of cumulative integration expenses through 2021, which is a significant amount of time. If you remember that this deal closed in 2016. They also had that cyber attack a few years ago. TNT systems were very outdated, very old, and very vulnerable to that type of thing. That alone cost FedEx about $400 million to sort of rectify that, not taking into account the lost business from that.
Notable on a day where we hear of more cyber attacks affecting Norsk Hydro, the aluminium company. What about what's already priced in? Because clearly not enough. The shares are falling, but this is a company that's already eroded its market value by 28% over the last 12 months. So these could get even worse.
I think a lot of the optimism is that people view TNT as sort of a long-term growth play, and I think we're now finding out just how long-term that actually is. Also another big factor in the stock has been the Amazon threat and how much of an impact that might actually have on FedEx's future growth. Now, we've got a lot of conflicting reports about that. People sort of fall on one side of the aisle or the other. Others, some see Amazon as a really significant threat. Others say that FedEx and UPS have sort of really carved out a competitive moat here that will be hard for Amazon to bridge.